For want of better words, I took the China stock market. I would say you've had your melt up in China, all predicated on what the PBOC had done. When you look at this market, is the regime still fully intact for you to take a little bit more of China on board, or are you a little bit cautious given the data sweep we've had this morning?
We remain very confident on China. Recent trips from our experts to the region just reinforce the confidence we have that China will continue to stimulate and that they will be successful. So they have the firepower to do it and they have the will. So the 3 trillion CNY that was pumped into the economy in March has only been matched once before, which was back in 2016 when they were seeing a previous wobble. So this is very much textbook from them. They understand the need to focus on growth over reform right now. And so these latest numbers aren't a problem for us. If anything, they're a positive, because some people have talked about, well, maybe if they get too big an impact too quickly, they'll actually take their foot off the pedal, whereas our base case is that the stimulus has a pronounced impact for around 12 to 18 months. So that's kind of the historical cycle of how long their stimuluses have really had an impact.
You would make the point, and we'll talk more about the U.S. inflation story a little bit later. Let's contain it to the east for the moment. You would maintain that the reflation story will come, but we must be a little bit patient from the epicenter of China. Is that your base case scenario?
Yeah, and they're suffering from this trade substitution. So the US tariffs are having some impact on Chinese imports. So over January and February, there was about $10 billion less of imports from China, with that being diverted through to Mexico, South Korea, and also to Vietnam. So they are suffering a bit of a headwind from the tariffs. You can completely understand why the Chinese are so keen to reach an agreement there, get that out the way so that the stimulus can have its full effect. To some degree, the US is right that it can win a trade war with China. You look at the growth impact of tariffs, and it can be about 5 times as big for the Chinese as for the US because of the size of exports in their economy and the size of exports and imports between the two countries.
Shinzo Abe and Donald Trump will meet a little bit later this week. One thing that caught my eye, and I popped it into the GTV library, these are the PMIs for Thailand, Vietnam, China, and Japan. And this is, I suppose, the big question. They, A, need a trade deal, and B, they need that trade deal to be able to even countenance a sales tax increase. What's your perception of Japan right now with those 2 key market facets?
So Japan is very much in this, you know, they've kicked the inflation target down the road. They're behind closed doors. They are pretty honest about the fact that they don't anticipate hitting it, that no further action will be taken to hit it, despite the fact that they still are aiming for it, if you like. So they're not taking any new actions, and that puts Japan in a difficult position. It's very tied into the global manufacturing cycle because of its large export sector, and so from that perspective it'll be seeing some run over from the trade war. I think more importantly is just, yeah, they just want to get the Donald Trump thing out the way so that they can move on. I mean, obviously they looked to do a deal as part of the Pacific Partnership previously, and the US pulled out, and it may well be that the end aim it ends up being pretty similar. There has been a lot of talk from US farmers around the impact that the European deal has had on them, where they've become marginally less competitive, and they've seen a big impact in areas like pork. So from that perspective, I think the US and particular segments of the US are particularly keen to see a quick deal in Japan, and then recognise he'll probably move on to Europe.
Yeah, and as far as that European story is concerned, would you agree with Goldman's? We've got a couple of lines to wrap up on Standard Chartered briefly, but would you agree with China, with Goldman's from yesterday, that this fragility, albeit fragile, peace in China is going to have quite a significant impact on our European story as well?
Absolutely. I mean, European stocks stand out as one of the few things that investors really don't like, and that probably gives them a bit more of a tailwind than other investments. So it is something that we own, and the real reason for that is partly around the China stimulus story, partly around the general gloom that we see there, and partly around the fiscal story in Europe, where we do expect to see countries like Germany actually pick up their fiscal spending. It'll be the biggest fiscal stimulus in Europe since 2010. Still very moderate, but still that's nearly a decade.
Okay.